Carlo, first of all, I just want to talk to you about the Veneto banks, because when you bought them, there was a lot of speculation that actually this puts you in a huge advantage compared to all your other competitors. Mm-hmm. Do you believe that that is without a doubt the case?
So the point of the Veneto banks is that you have, first of all, to avoid the systemic risk within the country. And Intesa Sanpaolo was the only one that can remove at all this risk within the country. So when you are CEO, you can move on increasing net income or reducing cost of equity. So cost of equity is related to systemic risk, and in case of Veneto banks, we were able to reduce cost of equity for Intesa Sanpaolo and for all the banking system in Italy. This transaction was, in my view, an example of team working within a bank, a European institution, and the government in Italy, and also Parliament, because you know that we need the approval of the Parliament to finalize the transaction. So right. That's the result of this story. But
what are the implications for Intesa Sanpaolo? It wasn't a bad deal, right? It was a good deal for you. That's fair.
So it was a deal that allow us to have capital neutral, dividend per share neutral, and earning per share accretion. So the point of deal is for sure a good deal. Mm-hmm. Is a deal that can allow us to change also part of the story into a restructuring, not only growth, that was part of the story of Intesa Sanpaolo, so growing revenues, transforming business model, reducing non-performing loans. Now we can add also story of reducing costs and restructuring. So I think that at the end, this is a good deal for Intesa Sanpaolo shareholders, but also for the customers of the Veneto Bank, for the real economy in Italy, but also for Europe at all, because the systemic risk in Italy could also be considered systemic risk in Europe.